Hello, this is Ernest Burley Jr., your cool insurance agent, back at you again with some more great information on more than insurance, right? Because I'm expanding the podcast. I've expanded it into financial planning and wealth management and money management and things of that nature, investing. So let's just get the intros out of the way real quick. I am a certified financial planner professional, also a chartered financial consultant, an NFLPA registered player financial advisor. I'm an investment advisory representative. I hold a Series 6, Series 63, and Series 7. So I do a lot of portfolio management and investing for clients, wealth management, things of that nature. I'm also an author of 2 books on money management. One is titled Money Management from Grade School to Grad School. See, that's me on the back. And the other is titled Money Management Easy as 1, 2, 3. So, pick up those books. I heard they're pretty good. I'd appreciate your support and spread that to others and have them just go on to, they're on Amazon, so you can pick them up on Amazon. Also, I'm a licensed insurance agent, as you know, with over 30 years experience in the industry and over 25 years in business, helping people out with insurance and financial planning and wealth management, things of that nature. I have clients all across the country, from the north to the south to the east to the west, all over. So state lines don't constrict or confine Burley Insurance and Financial Services from helping clientele from across the country. I specialize in wealth management, investing, asset protection, so protecting what people have accumulated, financial planning, insurance, and athlete management. So on the athlete management side, I'm an NFLPA registered player financial advisor on the NFL side. And on the NBA side, I'm a certified MBA agent. So MBPA certified player agent is the official title. The purpose of this podcast, okay, let's get right at it, is to educate you, to enlighten you, to empower you with clear, objective, unbiased information so you can make some great decisions for yourself and for your family, for your church members, for your business, whoever you're attached to. I hope that you spread the information to them also and ask them to check out the podcast also. Okay, so today's podcast is titled Gap Insurance, Cover the Gap. Now, this seems like something that's really minor, but it's really not a minor thing. Okay, so it seems like a small thing when you buy a vehicle, or an afterthought after you've purchased a vehicle. If something happens to your vehicle and you don't have this gap coverage. So this gap coverage could save you a lot of headaches and a lot of money. So what gap coverage does is it covers the gap when you have a situation of a total loss on your vehicle. So what the insurance company, here's what's going to happen. The insurance company is going to do this. If you have a total loss on your vehicle, which means the vehicle is just smashed up and is beyond repair, or it's going to cost more to repair than it's worth putting money into, what they're going to do is take a look at the vehicle and say, hey, this is what the vehicle is worth. And they're going to pay you what the vehicle is worth, not what you owe on the vehicle. What you owe on the vehicle is totally irrelevant to the insurance company. So, when you drive the vehicle off the lot, it goes down in value immediately, right? So you buy this $50,000 car, you drive it off the lot down the highway, now it's worth $45,000, but you still have a $50,000 loan on the vehicle, right? So I think we all know that the vehicles depreciate as soon as you drive them off the lot, and they depreciate heavily from year to year. So if you have a vehicle that's you have a $30,000 loan outstanding on the vehicle still, but it's only worth, say, $22,000, then you have a gap of $8,000. So if you have a total loss with that vehicle, the insurance company is going to pay you $22,000 because that's what it's worth. But the bank is going to be like, you still owe us another $8,000, right? So you're still on the hook for this $8,000. So you're going to have a car note continuously on a vehicle that you do not even have anymore. And you're going to have to replace the vehicle because you still have to get around, right? So, man, that's salt in the wound right there, to have to pay that bank a continual car note, or to come up with that additional $8,000, plus have a new car note for the vehicle you're using to replace the vehicle you had a total loss in. So what the gap coverage does is the insurance company will cover that gap for you. They cover the spread. So if you owe $8,000 to the bank, boom, they take care of that for you. So you don't have that gap to worry about. So gap insurance, very, very important. I would highly recommend you have that on your policy. You'll be glad you did. And like I said, when I talk about things, I don't talk from experience. I don't think I've had a podcast at all where I've spoken about something that I don't have actual experience in. So, hey, I had an experience where A vehicle was total loss. I had total loss on a vehicle last year, right? And but the vehicle was paid off. But I got what's called, and here's what I'm going to talk about in just a few seconds. There is a well, I'm going to get to that in a few seconds. Okay, so here we go. So the gap coverage gives you coverage to pay off the vehicle if you owe more on the vehicle than it's worth, right? Now, you get that with your insurance company. I just added onto my auto policy, or you can get it at the dealership. The dealership, they sell that type of stuff too, but you definitely don't want to finance it into your payment, right? Because if you do that, then you're paying whatever it costs for it, plus whatever interest rate you have on that loan. So that makes you pay a whole lot more for it over time. Over that 3, 4, 5, 6 year loan, you're paying interest on the premium for that benefit. So I don't recommend doing that. So just figure out what's best for you. I just added onto the auto policy real quick and easy. Normally about 10, 20 bucks per month more on your auto insurance to have that gap coverage, that protection for you. Now, here's what I was going to get to. Sometimes vehicles are already paid off. So, my vehicle was paid off. But these insurance companies, they also have within that endorsement, sometimes they'll pay you more for the total loss than the value of your vehicle. They'll pay you for a newer vehicle. They call it better vehicle replacement coverage. So say, for instance, if you have a 2018 vehicle and you have this gap coverage, some of these policies, say if that vehicle is paid off for some reason, or even if it's not paid off, so they will pay you for a 2020 vehicle instead of a 2018 vehicle. That's sweet. That's a sweet deal. So that's what I ended up getting. I had it's 2 model years newer. So they call it better vehicle replacement coverage. So different companies call it different things. That's normally the terminology out there for it, but that's a sweet deal too. So either you can have the gap coverage to cover that gap between what you owe on the vehicle and what the vehicle is actually worth if you have a total loss, or you get the value of a vehicle that's 2 model years newer than your current vehicle. That's something you definitely want to look into. So I would highly recommend doing that. That's some awesome stuff. You want to know the facts and protect yourself. And it's at like basically no cost. It's a very low cost to do that. You'll be glad you did. So that's it for today's podcast. It sounds like something very simple, but I don't know how many, I should have done a statistic study on this, on how many total losses there are in the country from day to day. I would venture to say close to half of Americans have had a total loss vehicle. Because it doesn't mean it's been like a really bad accident, but it could be so bad to where the insurance company feels that it's not worth it for them to put that much money into repairing a vehicle that sustained a certain amount of damage. I think the threshold is like 80%. So if the vehicle is worth $20,000, but it's going to cost $16,000 or more to repair that vehicle, they're going to write it off and total it. But I can't recall that specifically, but you can check with your insurance company and see, okay? That's it for today's podcast. The recap is cover the gap. It's all about protecting your assets too. You want to accumulate assets to help you out with your lifestyle currently and in the future, but you want to protect your assets too. So that gap coverage saves you a lot of headaches and saves you a lot of money to cover that gap, and also give you that better vehicle replacement coverage built into that. The takeaway is it's very inexpensive to do that. Like I said, only 10 to 20 bucks a month on your insurance policy. If you get it at the dealership, you want to find out what that is, but you don't want to finance that into your car payment. I don't recommend doing that. I want to thank you guys for listening. Thank you every week for listening to the podcast. I really appreciate it. I ask that you share the podcast with others and ask them to do the same thing, and so on and so on and so on, so we can make these podcasts go viral. I talk about a wide array of information, anything from insurance to real estate to paying off a mortgage early, whether you should finance a vehicle or pay it off if you have the cash to do so. So many different topics: business owners, entrepreneurs, employees. A lot of different podcasts are on my YouTube channel. So I ask that you do that. Go to my YouTube channel. I have all of my podcasts are on YouTube, and I have some other snippets on there also, okay? If you want to connect with me, very easy to do. My email address is ernest@ernestburleyjr.com. So just my first name at my full name.com. So ernest@ernestburleyjr.com. That's ERNEST@ERNESTBURLEYJR.com. Very easy, right? Or you can call my firm, 301-262-2600. Again, that's 301-262-2600. The name of my firm is Burley Insurance and Financial Services. So since we did talk a little bit about, the financial services aspect of what I do, then I have to give you this disclosure. Okay, so listen in on my disclosure. Burley Insurance and Financial Services Incorporated. The address here is 13621 Annapolis Road in Bowie, Maryland. Okay, even though I'm located in Maryland, I have clients all over the country, like I mentioned before. Securities and investment advisory services offered through Next Financial Group, Inc., member FINRA and SIPC. Burley Insurance and Financial Services Incorporated is not an affiliate of Next Financial Group, Inc. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Past performance does not guarantee future performance. All the views expressed are those of Ernest Burley Jr., myself, and Burley Insurance and Financial Services, Inc., and not those of Next Financial Group, Inc. Next Financial Group, Inc. does not provide tax advice. Okay, that's it. I hope you guys got some good information from this podcast. Pretty simple topic matter, but man, I tell you what, you get into a situation, you'll be glad that you listened to this podcast, or that you have that gap insurance to cover the gap. Okay, that's it. So I hope you guys got some good information. I look forward to you tuning in next time. So until next time, this is your cool insurance agent, Ernest Burley, and your certified financial planner, your chartered financial consultant, your investment advisor representative, your NFLPA registered player financial advisor, your author of 2 books on money management, Ernest Burley Jr., signing off for today. Until next time, y'all be safe out there and take care, okay?